The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And let's go to the market right away. Hey, great programming all the way through from this morning from John Logan. And let's just go right to the market. Dow's up 113, actually 114 at 17,549. S&P's up 15 at 2,055. Comp index is up 60 at 4772. The VIX has pulled back sharply from being in the mid-17s yesterday to down 70 cents. It's now at 1563. In the 15s is much better. It's really much better. In the 14s is much more bullish. Let's see what happens by the end of the day. We've got the E-mini right here up 13. There was a beautiful left side, right side price time match. It hasn't broken the left side low that we were looking at right here. That is the 2019s that was made back in March using the midpoint of the 20th of April. At 2105.25, you come down, and basically what you're looking at, let me just put that off there. There it is, okay? What we're looking at here is that it had 2 days to go, and in fact, yesterday it went to 2022, 3 points above, and now we've had a big reversal to the upside. We've seen many of these reversals. The only difference this time is that there's a stochastic that made a higher low when the price of the E-mini, S&P E-mini, was making a lower low at 2022. That's a nice divergence. But it's the weekly chart today that I'll be assessing at the close. And, of course, the 120-minute chart right here, whoops, let me get out of that, has hit resistance, but the 20, it's at 2052. 2055 is the 200-period exponential moving average. It was repelled back on the 18th at 2 o'clock in the afternoon at 2057.75. It didn't get there. And well, let's see what's happening. The day is young. A lot of attempts at marking up some of the stocks that were hit hardest. They don't seem to be holding very well. We'll go into that, and I'll discuss a bunch of things coming up. Let me just continue here. I want to go to the gold contract, GC. It's down $1.60 at 12.53. Now, what's really interesting about it, I still believe, and we're in this position of holding the dollar long, not expecting that much, but just treating it as a multi-week counter trend play to the gold. I just don't know if I really want to be shorting the gold contract. There are these big whipsaws. It's in this trading rectangle. I have a target of if at any point in the next 3 days it takes out 1240, it's at 1253.20 right now, then I have this rectangle that'll form. Let me now move this 120-minute chart out the way. And that says that in the month of June, that is going to be critical because that'll be the first opportunity we have of seeing whether or not there's a monthly leg. Hey, this has been moving up since, look at that, since December, the low of, on the continuous contract, 1047s, and it's gone all the way to the high, a recent high of 1306. That's a huge move, especially for gold. So it deserves a well-intentioned timeout. It just needs to take a breather. And there's this trend line that goes to about 1239. Let me just see where it'll be by next week. Somewhere around 1239.38. So my thinking is that we're going to pull back, and you look at the dollar. Not fantastic action, but very solid. Look at this, a straight up move from 91.92 to 95.43. If there's a new recovery high today, it goes to 95.51. That'll extend leg C. If it happens on Monday, that'll start leg D. But the closer you can get to 95.64, the dollar's at 95.43, up 15 cents. The closer you can get to the 95.60s. the greater the chance that it's going to hit the 200-period moving average of 95.89 in the daily chart. So I think I've covered a chunk of things. No, I haven't. Certainly, this is one of the most important. It's the TLT, the 20-year iShare Treasury Bond ETF. Made a peak D-top. Now I can put it down arrow saying that it's in a sell mode, but not the weekly. Well, the weekly is still on a sell signal. So the bonds are looking to me. I don't have that chart. I'll do it right now. The TNX, we may as well look at the 10-year. That's probably the most important. The TNX has had a big spiral to the upside. It hasn't broke the resistance. It's at 1858, 1.858%. The mini, let me call this, let me finish it. There we go. The mini downtrend line from the high of 2002 on the week of the 18th of March with a lower high of 19.41 the week of the 29th of April says that the big deal here will be if or how the TNX on a weekly basis breaks and closes above 1882. I'm going to call it 19. A break above will say to me, uh-oh, now we've got higher highs and higher lows. At this point, you've got an asymmetric triangle right there. And we'll see which side it breaks. That's all. In the meantime, my Japanization of bond yields theme continues. Now, I need to do a couple of things. One is I want to just go to this chart right here to tell you about the upcoming webinar. 2 weeks from last night, the consequences of a new market high. If there is a new market high and it comes in by about the second week of June, in other words, in June, if there's a new monthly high, that is going to change a whole bunch of things. There are huge implications. If there isn't, and in fact we break serious support in the next week or two under 17,200 to 17,000 key support, that means something else. I have to be looking at the markets in a little different way. Now, I'm going to be discussing just an immense amount of detail in the socio-political, economic, and Trends Watch vernacular. But most importantly, I will, because the month of May will have completed and we'll have the monthly chart of the Dow and the S&P, etc. I'll be able to talk about it in a very technical way. So let me just say that this is possibly one of the key moments, but only if we take out, let me make it very clear, it doesn't have to be the 18,351 high, the all-time high of the Dow, but certainly if it's the most recent high, the one that came in at 18,167. A break above that says there's a really good chance that we're going to go straight to the 18,351 all-time high, and then they're just huge implications. If you're looking at the market today, up 108 in the Dow, up 14 in the S&P, there's nothing here in this particular move that is out of the ordinary. So I'm going to be coming back. We'll go to Mark and Ford Collins. And Mark, if you can hold on through the break, I'll be right back once to talk about Intel. That's a good thing to look at, the semiconductor sector. And I'll just show this chart. Oh, I forgot to show it again. I'll show it as we break up. There we are. That's the 10-minute E-mini chart. I forgot to talk about these. I'll be back straight after this break.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 114. Just let me show this chart one more time. So now it's going to try to tackle the high of 2054, round number high. We'll see if it can break it. So far, there is buying. There's just no question about it. Let me just say, I'm going to go right now to our first caller. I just wanted to show that this is the leg F, maybe recycled in the NQ, the USO. I'll show that. Peak D is pulling back. That's crude oil. You've got this everywhere. So the commodities are weakening. Dollar seems to be holding quite well. Now we're going to go to Mark in Fort Collins. Mark, how are you?
Great, Basil. How are you?
I'm well, thank you. So your question is?
Yeah, I've been scaling into some calls on Intel when it's been in the mid-29s. It's gotten down there 3 different times in the last couple weeks. And it's having a really nice sign of strength today. But I just wondered what your thoughts are on the wave count on this, and if you have time after. I was also looking at Ford, kind of in the same vein.
Yeah, there are a couple of things going on. I looked at the semiconductor index last night and earlier this morning. Intel has been a big part of the SMHs. Let me just show the SMHs right here. And the SMHs are having a really big move to the upside today. At 1.56 at 53.97, the semiconductor market vector ETF. It's in leg C. I have to tell you something. I had 2 minds last night and early this morning. One of the reasons why we started adding longs in my opening call is that there are certain stocks that have acted very well. But I needed to have some confirmation to say, hey, maybe we have made a low because of the time and the head and shoulders pattern in the Dow. The Intel is part of the Dow, so I'm mentioning that. There are just a lot of conflicting sectors, stocks within sectors. stocks that are not necessarily sector related. And as a result, this move that you're pointing out to me right now, I missed that. And then Mr. Bill in the Dent says, Basil, big AMAT applied material numbers mentioned by Tommy the same affected more semis, including MU. Well, I've been hearing from my semiconductor friend, and he's happy as a clam. He says things are just moving along really well. But I've found over the years not to put stock in what he says, because sometimes it's belated and sometimes I don't get an exact correspondence with what he's saying with what I'm seeing in the market with the semiconductors necessarily, because sometimes when you go for meetings and stuff, the companies pump up certain areas and you kind of don't quite see exactly what's going on. So it's the chart that's telling me the story. And the way the weekly chart has spiked back above, it was looking horrible yesterday, and now it's spiked up again in the weekly chart, well above the 52.99, a point above the 52.99, 9-period moving average. The weekly chart is looking very good. So now let's go back to Intel. And I think that your idea, when did you start scaling in? Over the last week or so?
Yeah, last couple of weeks I've been buying some of the June 30 calls, and I'm ahead right now. But my concern is that we did a dreaded H
and broke below it.
Yeah, we went to an M, and then we went below that left side low of 29.52 yesterday at 29.50. So that got me a little concerned, and it was on slightly heavier volume. So I don't know, is the best we're going to get on this next run up to maybe a test of the 30.57 again?
So I'm going to do this. This is A, B, C, and then it got to a D yesterday. Okay, so there are two things. One, in the Chapman wave methodology, if you make the H pattern, let me just draw this in so folks know exactly what we're talking about since it's Technical Friday. And I'm going to draw the back of the H. That's the lowercase h pattern. I also need to make that a solid so that you can see it clearly. Style there. And now what we've got is a break, a close above the left side low of the 6th of May, which is 29.52. Yesterday it goes a little lower, it goes to 29.50. That says in the Chapman wave lowercase h pattern that if there is a move below the left side low in this particular formula, but a close above it, you can rally, but you're going to rally to the next tool of importance. It could be the 9-period moving average. It could be the peak, and that would be the peak of 30.57 on the 17th. But if it closes above that and the technicals are very good, you can go from a potential failure to a buy signal. Not yet a buy mode, but a buy signal. Now let me show you something else. I'm not sure if you noticed it. The stochastic, when it made the low on the 6th of May, folks, we're looking at Intel trading at 30.30 up 67. On the daily chart, the low that was made on the 6th of May saw the MACD declining, the stochastic declining with the price. But over the past week, but certainly over the past 3 weeks, the stochastic has been rallying, and it's gone from the 15, I'm guessing somewhere around the 16% area. Let me just check it out. Oh, it went all the way down to slow K. It went down to 11. At 11%, it's now at 30.71%. So that's saying on the daily chart, there's enough internal strength to take it to at least the high that was made on the 17th of 30.57. Now let's go into the next part of this. There's another pattern that over the years, I call it this was the Sears and Roebuck. Actually, it's the Sears Holdings pattern that came about years ago. It was in a weekly chart. I noticed suddenly that the H pattern not only had successfully turned around, but it was forming a cup pattern. We've seen that. We were looking at in the Dow a little while back. And that says that if there is a break above the left side key high of importance, in this case, as I say, the 17th at 30.57, there could be a move that takes it to the next area of importance, and that would be the gap, which is the high of 30.87 and the low of 31.03. I think what you've done, scaling in, that I think is terrific. I love the fact that you looked at the chart and you decided that you were not looking at the puts, you were looking at the calls, because there was a potential for the H pattern. Probably you were thinking successfully to hold, right? To hold successfully and then to bounce up. But in the meantime, it's done something else, which says there's a limit to the upside. But if that upside limit is broken with the technicals concurring, which they are right now, it could be a really nice trade. The weekly chart still has me a little concerned. It's not like the SMHs, which has a much stronger chart at this particular point of the day and the week. But I'm thinking that you've got yourself a really nice trade. Did you have a particular price point in mind, or you just wanted to get in the position and then start filtering out what you want to take off?
Well, yeah, I mean, I scaled into several different, like 3 different positions, and I've got the plan to get out of a portion if it hits that next peak at 30.57. And then I was looking at the gap as well for the next potentially scaling out of the other one.
I don't want to mess around. I think you've got a beautiful plan, and all I'm saying is that if it fails and goes underneath $30, then obviously that's a problem. But it looks good right now. Hey, thanks for calling. I appreciate it.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Now, folks, we're back, and sorry, Mark. I get scolded by Al, my engineer, if I keep bumping into the brake like that, and that was my concern there. But I will look at forward in a moment. I just want to run through all the different things that we're looking at here. So Adam asked about ECA. ECA is Encana Corporation or in the oil business, I haven't seen their name for a long time. What I'm looking at right now is that Encana has it's trading at $7.48, down 6 cents. I do like it. I like the weekly chart. I would prefer it 748 in leg C. I'd rather it even make a leg C and then a peak C in the daily, pull back to about 730, above 718, the 9-period moving average with a 707 stop. If you aren't in, then I would start a position there. If you are in Encana, ECA, I would say stay in the position. Try to keep to hold it, but I don't know what price point you're in at. But I'm just saying that if it breaks under 7, it's going to take a little bit longer to make that leg D in the weekly and the leg D even in the daily. So looking good. I must make a note of it myself because it's just the kind of stock that I like to look at. Let me just do this ECA. Oh, stretch across ECA. Okay. Also have to be able to read it sometime. So here we go. So that's ECA. And a question about another June sell-off coming. What was the question? What was the statement? Another June sell-off coming, like in 2015, XOP. What do you say about XOP? Oil exploration is the head and shoulders. Let me just look at the XOP coming up here. Okay, XOP is, that the ECA has actually a little nicer pattern, but the XOP is just holding well. It's not going to break at 34.32. At any point in the next week and a half, if it closes under 32, I'm going to say to you, that could be it for the oil exploration. Okay? So in the meantime, I see what you're saying, but I don't yet have that. Let me see what else says. The 104.42L bought the QQQ series. Let's see the QQQ series. And I say to you, you're doing what you're doing, and you're doing it well. Stick with it. It's at 106.74. Nice move up today. The weekly chart still says a lot of work to be done in the QQQ for it to really push much higher. Not much higher, I should say, for it to really push above the 110 level where the downtrend line is. But in the meantime, this is really the technicals were improving. I noticed that. It's one of the reasons why I was saying, should we switch from the short side, keep the core short of the Dow, but the multi short position, should we switch to the long side? Should I just get out? All I did is I raised the buy stop. That's just another way to deal with it. Let the market tell me. We've got longs. We'll talk about that in a minute. Meantime, back at the ranch. So, Al, congratulations. Julie says, crude oil. You see, I don't have, for crude oil, I'm at a peak E. I'm having a high-level consolidation here, a strong leg C. I don't want to be shorting it unless you're a trader. And if you are a trader, and we had a caller yesterday, we had Tom looking at was it Tim? It was Tim that was looking at the SCO. And the SCO had a very nice move up, and then it just stalled. I was looking at it on the shorter-term time frame. I just think that it looks to me like the USCO, the SCO, which is, we were looking at the opposite side, weren't we? No, we were looking at SCO. So the SCO is the ProShares Ultra Short Bloomberg Crude, and it looks to me now like crude oil could hold a little bit better, and it could pull back to 76.34, the 200-period exponential moving average, and that's where I look at the two together. Meantime, as I said, I think crude oil is holding well. I would not think of shorting it as a 5 to 10 day short at this point. I might get there, but right now I think it's just holding quite well. So I hope that answers the question. Should we leave it for long? Yeah, if you're out, then just for now let it be, because I think there's limited upside. At least I think at this point there could be a leg D in the actual USO contract going above 12. So that just has 30 cents to go, 21 cents, 22 cents to go. And then I think it starts to pull back a little bit. So yeah, and in the meantime, we've got, let me just check a bunch of things. Of course, I just covered what I needed to be looking at. So let me see. Oh, there it is. Good. So the XAL airline, I didn't get to it yesterday. I know that you asked for it. XAL. and that is stuck at 84.62. Oh, wow, it looks like the SCO right now at the same price, just about. At 84.62, up 1. The ARCA airline index is really not. I think they're having a problem. I think in the airlines, I think people are not traveling as much. I got a very strong feeling from the vacational resort stocks and hotel type stocks that something's going on here that's stalling it a little bit. So unless the XAL can take out 88, it's at 84.68 within I'd have to say speed is necessary. It needs to actually, even 86.70 is the 9-period moving average of the weekly chart. Unless it can have a good 1.5 to 2 point move over the next 2 days, it's just not, it's not doing anything. So that's that there. I hope I answered the question. And the transportation, you see, now here's a difference. Look, the transportation index, the IYT, weekly chart is much better. And the monthly chart is real close to just breaking the downtrend line. But on a daily chart, it says, whoa, a lot of work needs to be done. At 138 on the IYT, up $1.95, the iShares of the Dow Jones Transportation Average, I don't know, a lot needs to be done. So in the meantime, back at the ranch, until the IYT can break above 140, it's at 137.25, I would say that this is just a bounce within that bear phase. And then just the XRT, and then, we've got callers on the line. I mean, the XRT is just trying to bounce right now. It's not looking all that good. That's the retail sector. Let's go to Brent in Martinez, California. Brent, how are you?
I'm great, Basil. How are you?
I'm good, thank you.
Good deal.
You'd like to look at?
I called about Gilead. I'm kind of shifting my focus a little bit away from the commodity stocks for the moment.
Yeah, I can see that. If you're into Gilead, which is in the biotechs, yes.
Yeah, I'm kind of thinking there might be a little rotation because the commodity stocks have had such a great run, and they might take a little breather, and then there might be some money shipped to this area that's a little more beaten down. So that's my thinking. I might be wrong. We'll see. But I bought August calls on Gilead at the 82.50s.
The 82.50, and it's an 83.01. You just bought them, and you well, because it's so far out, you're probably just in the money, but you're in the money.
I bought them the other day when it was lower. It was down at 81 something when I bought them.
Excellent, very good. Okay, so now let's just do a little homework here. So, and just in terms of full disclosure, I know that I talk about the IBB a lot, which is the biotech, the NASDAQ biotech ETF, and in fact, the Gilead is a big part of that. So if I can go to the IBB, what we've done is that I thought a lot about it this morning. Then I thought, I'll give it a day. But what happened was we took our 111-point profit from the short right at the top, got out, and we went right back in on the bounce at the same price and took another 20 points profit. And 2 days ago, whatever it was, we got back in. And today we took a 1-point profit, and then I wanted to get out of it. It's trading at 264.51, which gives me a good springboard for which to talk about Brent. Brent, I'm going to talk about Guilds.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and I got a scolding, another scolding for going right into the break like that. But anyway, here we are. We've got Brent from Martinez, California, looking at GILD, G-I-L-D. I looked at the IBB, nice candles. And what's really exciting about this is that you've had 1, 2, 3, 4, 5. Today will be an extension, but otherwise these 4 bars, and let me just do this since it's Technical Friday. These 4 bars are just beautiful. I don't ever know how this works. It has to do with an emotional thing, and then the motion just stops dead. But how do you get a straight line like that that tells the stock to stop dead? And even though the base is different each time, it's just an amazing thing. So that if the IBB spirals from 264.80 right now into the 265.50 area, it'll have broken that, and that'll be very positive. So that means I can go to GILD, because as I say, it's a big part. And GILD has come off the bottom very nicely. It's up 89 cents at 83.03. The most important aspect about this right now is that the let me just check to see what that is. That is the moving average one line. Yeah, that 9-period simple moving average is at 83.29 and 83, yeah. And is that correct? Let me just do that again. 83.42. And then the 9-period exponential moving average is at 83.79. So you've got some kind of, here we go. You've got the technicals just starting to move higher. This is not one of the better ones, but because it's been beaten down from a high of 103.10 back on the 26th of April down to the low of yesterday, this is a 20-point decline almost. This is a 19-point decline. That is huge. So it's about a 17%, 18% decline. There should be some kind of a bounce. So I'm just going to say to you, you're way out in August. You probably will not be there in Gilead in August. My thinking is that it could bounce based on the weekly and the monthly charts. It could bounce a little bit further, and the weekly chart really doesn't look very good. So this is what I'd be looking at. If it closes above 84.30 on Monday, I would like to say Monday, maybe it's Tuesday, but it has to be the very first part of the week. It needs to do that because it needs to clear all the little mini resistances in the 83.70s. So 83.85, 83.90, especially 84, it's starting to look really much, much, much better. Then the next thing I'd be looking at is to try to tackle the 86.40 high of the bar of the 11th, that very ugly bar that went from 86.40 down to 83.81. And I just go step by step. So as I say, I'm not sure, Brent, that you're going to be holding this all that long. But hopefully the biotechs have made some kind of a bottom here, and they're going to have a multi-week rally for you. I just don't think so. I think it's still the area that is the most vulnerable, both politically and technically. But your buying is perfect because the low was yesterday at, what was it, 81.28, and it's already up 1 3/4. So I think that's good. But the scaling idea is really very good. I'm not sure why you went so far out to August, but it's July or August. I think it's the same sort of thing, I suppose. The big objective would be to see Gilead by Friday a week have a terrific rally and go to 86.50 into above all the resistance that really started in this last move down from about the early part of May to May the 10th. That would really be very good action. Hope that helps you.
Yeah, I just always give myself plenty of time, Baz. I don't normally use it, but I like to have it.
So what's really exciting about your entry point is that the 200-period moving average in the weekly is at 80.72. 80.72 says you can even have time on your side, even if there is a bit of a pullback, because at that level, it should start to bounce around. It shouldn't go much lower than that, and that would be a really good springboard and a cushion. Hope that helps you.
It does very much so, Basil. Have a wonderful weekend, and I'll talk to you soon.
Thank you. Great to hear from you. And folks, let's do a couple of other things here. So I got some cool thing. Let's see. And Chris asks, hi, Basil. I'm looking at the trend. I see the morning is hit very low. I'm not asking for your magic numbers, just your thoughts about the morning low. Thanks for all you do, Chris. Okay, Chris, this is what I'm looking at here. I'll go to it right now because it's going to fit in with what I want to look at in other aspects. Here we go. So here's the... I'm going to talk about this 120-minute chart, made a beautiful left side, right side price time match in the Dow. So the trend this morning went down to 0.24. That says to me that within 2 days, we might already have done it, but it says within 2 days, you should have a very sharp move between 9 and 11 points in the E-minis futures, which should translate to positive action in the cash. That's number one. Number two is, on rare occasions, and I don't even remember when. I'm not even sure if I can find it. I'll try to see here. It just goes way back. About, I'd even say 2 years ago, for 2 consecutive months, on the Friday of options expiration, on the 1 month, I had a signal that said we should be moving much higher within 2 days, and the following 2 days were sharply down, with little tiny bounces that I didn't count. I counted it as a failure in the Chapman wave trend gauge. On another occasion, the third occasion, I was all ready for that. And what happened, the second occasion, I was all ready for that because I just figured out that, that must have been options expiration because the conglomeration of all the buying and selling right at the opening. And then I said, whoa, wait a minute. I'm going to have that in mind, and let's see what happens. And what happened was there was a sharp move. No, wait a minute. Am I getting my own technique wrong? Yes. Sorry. The when it's below a certain number, when it's very low, the very next day, not even 2 days, it's within 1 day. The Dow should open, doesn't matter where the futures are, the Dow should go negative. That's what I meant to say, I'm sorry. And it's when it's very high that you got the 2 day in place. So as it stands right now, yes, good eye. And I haven't given away my magic number, but it is at 0.28. And there should be some kind of a pullback first thing on Monday. Boy, that doesn't look like it now, but that's the way this particular technique works. It's got a fantastic up in the high 90% accuracy rate. The time that I was thinking of, and as I was talking about, I'm saying that's not quite what happened. What happened was that the market was sharply higher the next day after the Friday, on the Monday, after the Friday had a very sharp 0.18, I think it was, low. And then what happened is it didn't come back at all. It came back a little bit, but it never went negative. The second Friday, what happened, it was up almost 300 points. I think that's what it was. And it came all the way down. The Dow was up 300 points. And then it came all the way down mid-session, mid-morning actually, to like plus 55, something crazy like that. and then it closed higher. So that's why I've spoken about it, and I say that once in a while with options expiration, but it seems to have smoothed out. So it's active, and we'll see if it works. Whoa, sorry about that. I got another call about the trend. I see a low trend reading. Oh, yeah, and William, you did the same thing. So I hope I've explained it. Yes, a very low trend reading. We should get some kind of pullback in the Dow on Monday. Hey, I'll be back straight after this break. Good time.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Don't forget those swimming lessons coming right up and all the other great programming here. A, B, C, D, E, F. Okay, I just finished. Quick question here. Okay, so Bill, congratulations. You know, I'm really proud of all the folks that have picked up many of these techniques. Basil, I see a low trend reading for today at 0.35. I have 0.20, whatever I said it was, 28. Which should suggest a rug pull on Monday. Do you concur? Yes, I do. Could be wrong, but that's what I'm saying. Okay, so this is, Clack looks very good. So the question, let's see who asked this. Yes. So I emailed to say, Basil, with Amat up, would Clack or LRCX be worth a look at as a starting position? Thanks. You know what I'm going to suggest is just the first day of a big move, a gap up to the upside. The weekly chart is looking quite good. The monthly chart is still, even though it's made a peak F top, it's gone back. It looks to me, I have to count this as a leg B. I have to tell you, the more I'm looking at charts, the more I think that we are going to make a new high this summer in the Dow. And if we do, it's not the major top. because that'll only be the next leg up in the monthly chart. It's in leg B, maybe making a peak B in May. So that could be C, could be, maybe it's D, who knows? But that's the way I'm looking at it right now. So I think we're getting really close to some, maybe we've already made the low of this particular move, I'm not sure. So answer is yes. CLAC looks good. Do I want to, I'd only start a position. It's at 69.57, made a low in the 67.30s. It has a high back in the 73.74 area. I would just CLAC or LRCX. I know that my friend loves, he says it's a great company, LRC, Land Research. I actually think that CLAC's chart looks a little better. So between the two, I'd say I'd probably choose CLAC. Start a position. Don't get carried away. Just start a position. We have to go through Monday and Tuesday to see if there's a give back of the gains today. So now let's do this. We've got a little time to wrap up. I want to do a couple of things. In the webinar that I'm going to talk about, this is only for subscribers and you have time, this is a great time to get my service, because you'll get to understand by the time I give the webinar, you'll be conversant with the different techniques we're using. Maybe I hope you will have had some successful trades. We'll see. Had a question about, I didn't get to that. Bob asked about Bank of America. Bank of America is acting quite well. It's up 6 cents today. For my opening call subscribers, we actually did, I mentioned it yesterday, we bought the XLF at $22.99. It's at $23.29, big deal, it's up 30 cents, but it is moving higher. And let's see what happens, because it could make that H pattern, and it will if it breaks under 23 by Wednesday of next week. But if instead it can push to 23.44, it's looking good. So I'm going to say to you, yeah, Bank of America is kind of like the chart of the XLF. I just wanted to be more generic. I didn't want to be that specific at this particular time. So my recommendation is I would be more generic. If you're just going into the banks for the first time, do that. Go to the XLF. If everything acts well, you can start to look at the others. I mean, you're looking at Goldman Sachs. I heard John Logan this morning talking about Goldman Sachs. Yeah, that's acting very poorly. And usually it's kind of a benchmark. But I think there's a diversion between some of the good stocks like DB. I just wouldn't be looking at Deutsche Bank at all. I don't care where it's going to go to after this, but it's got too many political problems. So that's not the way to look at this. Look at the best of the best, but I would just stay with the XLF for now. So let's do this. The day is young. I showed you the chart. This is the VIX index. The VIX index is trying to form based on that pink line. It made a peak E-top, made a beautiful left side, right side. No, it wasn't quite. Yeah, left side, right side price time match. They went a little lower. Watch the VIX. The VIX at 1549. If the market is going to have another big rally into the close today, the VIX should drop possibly to 1520 or under. If the VIX suddenly starts to rally to 1560 or 1580, you could see the market give back even more of the gains so far. I'll be doing a lot of work over the weekend, showing my slides and to my subscribers. Try to get my subscription now, because you'll be way ahead of the game by the time the webinar comes. Have a great day. Stay tuned for your swimming lesson.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.